Hey everyone on YouTube. Today I'm going to go through a brief showcase of my dividend portfolio. It's going to be the first in a series which follows my journey as I build up my dividend portfolio through the years. Basically, I'm going to start by showing you the main page, which is, of course, the profile overview. This basically showcases all the companies which I currently invest in, all the details, the statistics to do with them, what I bought them for, and all the other details. First of all, we're going to go through the companies that I currently own. So we've got Aviva, Chesnara, City of London Investment Trust, HSBC, Land Securities, Lloyds Banking, Mondi, PayPoint, and SSE. These are the current dividend yields, which of course are a bit high, which is because the value of these stocks have currently decreased with the current catastrophe that is Brexit. The next is the yield on cost, which I currently do not have. Bear with me, I'll get to that. Of course, we've got the payouts per share. So this is based on how much each of these companies have paid within the last year for their dividends, and basically just saying that they're going to continue paying that, just basically believing that they will. The next one, we've got the amount of shares that I originally bought of each of these companies, and then, of course, how much I have currently. Um, Continuing through, I'm not going to go into any of these details just yet. We'll get to that. The next one's shares per quarter. So this is if, for instance, I was to reinvest this amount here. Say it was a viewer. If I got 30 cents or 30 pence, excuse me, per quarter, I wouldn't know. Sorry, I get 30 cents a year. And then basically, if I reinvested that, that would be how many shares I would have on top of the current amount, which is this one. So that's what that is, the quarterly shares. Then we've got cost basis, ignoring that one. The share price, so this is the current share price, and all of these ones here. And then we've, of course, got the value. The current return is coming. Again, I'm working on it. Still a lot of spreadsheets. And then we've got the forward annual payouts. Last one that I'm really going to look at here, it goes a bit further, but there's a bit much to go into just now. We've got the current, basically the sector of each of these companies. You'll probably notice that's a lot of financials, and I'm working on basically mending that. Next one, right, I'm going to go to allocation. This will basically go through basically what sectors. Yeah, like I said, so it's picked up and read all the sectors that I showed you just there, and that is a bit heavy right there. That is, and of course this chart kind of shows exactly what I'm talking about. Why is I'm in so much financials? I don't know. I'm going to try and diversify that a bit more over the next year. Then we've got, again, just basically taking these from the last sheet, basically shows the value, excuse me, of each of these and the percentage that each of these companies are on the portfolio. This is shown in this chart down here, which shows basically all the companies. Let's see if I can't seem to enlarge that. But that basically shows all the companies that I have and what proportion of the portfolio that they are. This is basically how much of a percentage each of the companies are in value of my portfolio, and this is the one in terms of income. So large amount of financials, large amount of financial income, basically like that. I think that's it for this page. Next one, we've got yearly dividends. So this is basically a quick run through history. We have 2016, we had £216 and 33 pence in dividends. The following year, not much of an increase, £268 and 10 pence. I don't know why it was not more than that, considering that the next year was a fairly big jump of £500 for the dividends across the year. So it was up to £757 and 9 pence. And this year, although we're just in August just now, it's sitting at £827.81. This is basically all within my stocks and shares ISA, within the UK as well, obviously. We've got this is our main portfolio. This is basically totaling around about 27, 28, 29, 30, depending on the day. I mean, it's changing so much now. 27,000, I should have said that. Employee shares, this is based off when I used to work with Aviva. So I have some shares from them. I don't know what that box is doing. And they basically pay me this amount. They've already paid me that amount, and that's how much they're going to be paying me out for each month of the year. And then we've got YouTube money. If I ever end up making any, you guys can help me out. Just hit a like button, usual sort of stuff. Tell maybe someone that might be interested in it. We've got totals again. So the only difference with this one, these are the same as you see, but it's kind of added these two together. So if I do make more across these, then I'll accumulate these into one. So that's why there's a difference between that and that. Dividends by account. This one's a bit shaky. This bottom one is dividend growth 5%. I think we've gone well above that. This one just shows basically the difference. That was the first year, second year, third year. I don't know. It's a bit random. This one's a very good chart. So it shows how much we've made per month, basically going forward across the years. So on average, in the first year, we made £18.03 per month. In the second year, we made on average per month £22.34. Same with the third year, £63.09, and this year we're up to £72.44 for each of these months this year, which is good. Going into 2021, making space, seeing what it's going to be like then. I'll see if I can try and do like a chart that shows like where I think I'm going to be then, which will kind of be interesting to see if I can meet those goals. And this just basically shows, this is a graph that showed basically the details that we had in that previous one. This is my monthly dividends. So this shows all of the dividend payments that, well, it doesn't show all of them. It shows the accumulated amount that I've received, for instance, in March of 2016. So this will be like a total, say this was like £10 plus £12.19. It would just show the total for that month. But it's good because it can show basically where it is that you're getting, or what time of the year that you're getting your money, which is always good for forecasting basically when you want to be putting money into the stock market. So we've just had our biggest month ever. Yep, that looks colossal compared to everything else. So behind that we had £239.52 and £171.42, but that's just pretty ridiculous, to be honest. I'm still trying to get over that. That was in May, wasn't it? May, yep. And this chart basically shows how ridiculous it is. So let's just show the key first. We've got blue, green, yellow, 17, 18, 19. So blue, 17, that was fairly okay. Then 18 gets a bit bigger, a bit chunkier in September, which I'm looking forward to of this year. And basically this one just goes off the chart. This is ridiculous. I think this is because I bought so many companies last year which didn't pay last year, because you have to wait for them to pay like an annual dividend, which I think I just missed at the time. But then that's come through, and that's 600 quid that I can invest and put towards more shares, which will eventually create me more income. It's a great thing. We're going to move on. What is this one? That one's relevant, and that one's irrelevant as well. So I think that's me covered everything in the portfolio just now. A quick little snap back. So what are we currently sitting on? We're currently sitting on, that's the income. This is the current amount that I'm hoping to get this year from dividends. So we're currently sitting on like 800. Yeah, 800. I don't think that's right. Yeah, I don't think that's right. I think that should say 1,200. I'll get that adjusted for the next video. But this is the current value of the portfolio. It's £27,625.07. So this is just obviously all these added up. That's the current amount that we have. Right. I think that's us covered it.